Hello, everyone. This is the start of a new series where you can learn how to trade as Bitcoin is almost pumping to new all time highs, but who knows whether it will. I don't think it will today. It looks very bullish. However, we're focusing on Elliott Waves today, and we're looking at a impulsive five waves, the impulsive part of Elliott Wave, and less on the corrective. We'll look at the corrective another day. So, Elliott Wave was created by a guy called Ralph Nelson Elliott back in the 1800s. And this guy was obviously very clever because he's managed to incorporate Fibonacci retracements and extensions into the chart. Fibonacci numbers are often found in nature all the time. If you look outside, there's going to be a tree branch which is based on Fibonacci. You're going to see shells on the beach which are based on Fibonacci too. The spirals. You can look at pines. Everything is based on that, and therefore, the way that the human brain operates is also based on, um, um, the general market psychology is also based on Fibonacci patterns too. Somehow, so clever, and this is why it baffles me almost every time. So we could start with wave one. Okay, I'm going to give you an example here, and we're going to look at Nvidia for a second. If we go on Nvidia and we go on the monthly, for example, yeah. So if we take a look at Nvidia, we'll go all the way back to say, who knows? Let's have a look. Yeah, let's take that off log. Amazing. Reset. Perfect. See, I've already done this. So if we take a look at this, okay, this is the first impulsive wave. Let's get rid of this. This is the start of the first impulsive wave. All right. Within every asset, mostly there is a Elliott wave structure. Here we're probably looking at the super cycle, let's just say, or the grand super cycle, because there's many different Elliott waves within Elliott waves, within Elliott waves, within Elliott waves, within Elliott waves. Within that structure there, all the way from 0 to 1, there's 1, 2, 3, 4, 5, one ABC or WXY or WXYZ, and there are 22 other corrective patterns that are based within the chart itself. Okay, so wave one. Let's just say here, okay, you were looking at the back of your PlayStation 2 or 3. When was this? 19. Okay, 3 or 4. And you were like, oh my God, okay, there's this chip in the back of this PlayStation. Maybe it could be worth something someday. Okay. So this is when there's a lot of skepticism within the market. Wave one is when there's a lot of skepticism within the market. There's often no one's really buying it. There's not too many investors involved in it. So that's wave one. Okay, the impulsive wave one. It's a starting point of a new trend. And as you can see, this is a starting point of a new trend. And then we go into the wave two. After the initial excitement is over, I think I've already just showed you this. However, but I'll show you again. It's like 1,000% gain, 1,100% gain. So for anyone at that point, they're like, damn, I've just made 1,000% on my investment because I looked at the back of my PlayStation and now my £100 investment is worth £10,000, or sorry, £1,000. Yeah, yeah. So amazingly, this is such a good way to predict the market trend of an asset. So after wave one excitement's over, we then go into the corrective phase, and we'll go look at the corrective phase in more detail. Yeah, okay. Yeah, Bitcoin's making some movements today. Lovely. So the corrective 2 is an ABC or a WXY or a WXYZ, depending on the complexity of it and how deep within the chart you are. But most of the time, it's a B, C. Let's just say for this sake. Okay, you could see it. I mean, look at that, perfect. You could say it will retrace to the 618, and this is this is the large scale. Okay, this is on the large scale, or maybe even the small scale. However, it can retrace to zero point 0.5 or 0.382, but anywhere between there, or even the 786 or the 886, anywhere between there. However, if it does go below, if it does go below the start of wave 0, your count is invalidated. It can never go below, and the count is invalid. Right. So after we've had our correction and people have taken profits from their 1000% gains after seeing their PlayStation, maybe they've even sold it, God forbid, and it's now what would have been $1,000. We then go into the most important, the biggest and most powerful extended wave, and that is fueled by widespread recognition, okay, of the trend. Everyone's talking about it. Everyone's like, "Holy hell! Have you heard of Nvidia, or have you heard of Bitcoin, man? It's going to the moon, for example." And that drives the trend forward with strong momentum. We can see a really strong momentum, and often we'll go in more depth in the next video, but we would like to see the 1.618, from the length of wave 1 to wave 2 to get wave 3, and that would be the 1.618. We can look at a real live example on Bitcoin later, which would be actually pretty good. Okay. So after we've got wave 3 and everyone's really excited about it, people start taking profit again. And like, if you're this guy that bought the PlayStation chip back in the day, you're absolutely loving it. You've taken even more profit. And at that point, you're up, thousands of hundreds of thousands of percentages, probably. And you've taken profit. And more people are taking profit. So this wave represents another correction into wave 4. And it would often be like an ABC or WXY or WXYZ or an ABCDE triangle or something. But for me, I'd like it to go to the 1-to-1 extension of the length of wave 1 to 2. It can go anywhere from, up here to down here. As long as it does, there is a cardinal rule to this, a cardinal rule of Elliott Wave, in that wave 4, just like wave 2 can't go below wave 0 or the start point, wave 4 cannot go below wave 1. If it goes below wave 1, your Elliott Wave count is invalidated. I don't mind a wick below, yeah, but if you get a body close, above, and it wicks below, then you could count that, but not really. I guess I need to read up on that one again, but I'm pretty sure you can't. So after you've got wave 4, you're then looking at after the corrective of the ABC, you're then looking up to wave 5, and wave 5 is the last push by the trends enthusiasts. While the move is significant, it's often weaker than wave 3 as early adopters begin exiting. Momentum indicators like your RSI or your CVD might show some divergences here. Like, for example, you might see very bearish divergences as we go above, or maybe not on Bitcoin, because the RSI is so manipulated on here and so lagging. You'd probably want to look at CVD between the differences of here, but or some other open interest or more advanced indicator for you to be able to determine whether the top is in at the time. So again, the momentum's quite a lot less than wave 3, but it can extend. So let's just say for this sake, again, it extends to the 2.618. That's an extended wave 5. But for this example, we'll put it here. However, it can also be a truncated wave 5, and that would be like your double top, for example. Just like wave 1 can be a flip of resistance into support, like a resistance flip into support. Wave 5 can also be truncated as a double top, and that would be really, really bearish. That would put your ABC all the way down here, and you'd probably, look at the 1.618 from there. Anyway, I'll delete that for now. Anyway, where were we? So to get wave 5, I wasn't going to go into detail with this today, but I'll just go into detail with it anyway. It's like the length of wave 1 to 4 if you want the 1-to-1 extension, or the length of wave, the start of the impulse, all the way to wave 3. So 0 to 3. And that would be the 0.618, ideally, to get your wave 5. It can go higher than that, and it can extend to the 1-to-1. It can extend to the 1-to-1, or if you're taking it from 1 to 4, it can extend to the 1.618. It could even extend there as well. And the same with wave 3. That can also extend further to the 2.618. But we'll stick to this today because it's much, much simpler, really, isn't it? So we've got this. And that's pretty much it, to be honest. But we'll go over the cardinal rules one more time, just to be very, very clear with the entire thing. So wave 2 cannot retrace past the start point. Okay. If it does, you've invalidated your Elliott wave count. And wave 3 can never be the shortest among all the waves of wave 1, 3, and 5. And it's usually the strongest and the most impulsive. Wave 4 cannot overlap price action, and it cannot go below wave 1. Yes, it may be able to wick below, like that's a new sort of rule, but in the ideal scenario, you would want it to go to around here, quite a little bit more above, maybe like flip the resistance. That's pretty bullish. Flip resistance into support. And I guess that's pretty much it. We have the ABC. We'll go over that in a different video, but thank you very much for listening to the first episode of the learning module for Elliott Wave. And I'll see you later. Bye.